All right, this is Dr. Muller here once again. This is the first video on Elliot wave analysis. So what we are going to learn today is the basic 1, 2, 3, 4, 5 pattern. We'll actually continue the complex, that is the ABC, the WXY, the WXYXZ, and then the triangles and so on and so forth. So let's look at this pair, Euro AUD, and the theory applies to every asset. Okay, so according to Elliot, bad news, would have driven the assets to the lows. Something happened. So let's see, the assets keep going to the lows. They keep going to the lows. Okay, let's increase it a bit. Okay, I think it's okay. So the assets keep driving to the lows, all right? Then he said that when you get to the lows, there will be a rebound. And in the rebound, that is the wave 1. So mostly wave 1 is very, very hard to identify, but we would learn how to trade from wave 2 to wave 5. But in beginner stage, you should learn how to trade wave 4 to 5. You will not trade wave 3. So there is a rebound. Market rejected the lows. We had a high. But this is what is going to happen. This move cannot carry us to a new low. All right? That is when the principle comes in. So if this is wave 1, then wave 2. Wave 2 cannot go below here. If it goes below here, it has invalidated the Elliott wave principle. Okay? So since we have a rejection, let's say we call this wave 1. We do not know. All right? So let's continue. We are going to continue playing. Then price did not carry us to the lows. Okay? You see, price is not carrying us to new lows. So this is giving us an idea that we are in wave 2. We are in wave 2. Okay? So we have our wave 2 here. Okay. Are we going to go to wave 3? Are we going to go to wave 3? No. Okay, so let's see. All right. So let's pause here. This structure. So now we have wave 1, and then wave 2 was subdivided into 2, which is A, B, C. All right. So this is A, that is B, and that is your C. In the corrective structures, we have zigzag. Okay. We have flats, which is 1, 2, 3. All right. In the flats, we have regular flat, which is this. Let me do a bullish regular flat. So a regular flat. Then we have irregular flat, and then in the irregular flat, we have expanded flat and running flat. So this one of the irregular flats, which is a running flat. This flat will break the top. Let me color it. Will break the top, but will not break the bottom. Okay. Then we have the second irregular flat, which is called the expanded flat. This flat will break the top and bottom as well. So This is how it looks like. It will break the top and then come and break the bottom. Okay, so looking at this structure, this is a running flat, right? A running flat. Okay, so we have a running flat here in wave 2. Okay, so price will carry us to the highs. According to the principle, wave 3 should be a minimum of 1.618 Fibonacci expansion. So if that is the case, we find 1.618 Fibonacci expansion. Most traders put the expansion to here. This is very wrong. Okay, in the case of this, that is when you find this. Okay, but most traders put the expansion to here. So even though it is wrong, it looks like it has been widely accepted that way. And when you do this, you are calculating the expansion of the retracement, not the extension itself. Okay, so this should take us all the way to 1.618, that is here. If price travel here, it means that we are in wave 3. And in wave 3, it means that we can get a 5 sequence to the upside. Okay, so let's see how price is going to play out. Let's see how price is going to play out. So we label this wave 1, wave 2, wave 3, wave 4, wave 5. Okay. And then what happens? ABC. So this is A, B, and then the C. Okay, pause. So price is actually playing around the 1.618. Let me change this one. Okay, I maintain this one, and I'll rather change this one to a smaller wave degree. Okay, now let me show the waves. Oh, wow. No, it should be this one. This one is what I wanted to change. Okay, so I wanted to change it to sub macro. All right, I didn't show the wave. Let me show the wave. Okay. All right, so this is now at wave 3. Okay, we do not know where wave 3, if it hits with 1.618, it means that we are in wave 3. Okay, so let's keep playing it. Let's see where wave 3 will end. If wave 3 ends, we should be in wave 4 as soon as possible. So wave 3 continues, and we are still going. We are still going. Let's see how price is going to go. Okay, it looks like we are in wave 4 now. Okay, so the rule says that if wave 2 is a sideways correction, wave 3 will be a zigzag correction. And if wave 2 is a zigzag correction, then wave 4 is going to be a flat correction. But it all works with Fibonacci ratios. So wave 4 would travel a minimum to 50 Fibonacci or 38. So that's where we would target it. Okay, So price should come into this area, this Fibonacci area. Then we can start buying it to the upside. So let's see if price is going to drop all the way to this area. But sometimes what happens is that the move will be so strong that you are not going to get that move. Okay, so wave 4 has already started. It was a short move, which is a 23. It was a 23 Fibonacci. So sometimes you will not get, I should actually travel to this area. But sometimes when you have this fast move, price will only travel 23%. And when it does that, it will continue to the wave 5. So that's our wave 4. And wave 5, we have two ways of targeting wave 5. Okay, two ways of targeting wave 5. The first way is when we get to the high of wave 3, we take profit. And then the second way is by using the Fibonacci expansion tool. So we are going to use the Fibonacci expansion tool. The first way, we find this and oh no, okay. So we find this and that. So that should give us 127 Fibonacci. We should go a little higher. 127 Fibonacci, right? So when we are at 127 Fibonacci, we would start to think of profit taken. So let's travel and see if we are going to go to the 127 as it is. Price is giving us a flag. So we are 127. We have completed the cycle. So these are wave 5. So after the wave 5, price will do an ABC correction. Okay, and this ABC correction would come all the way to 0.618 of this whole swing. So let's take our Fibonacci. Then we will go to 50 or 618 of this whole 10. Okay, so let's take the 23, take that, and then we add only these two. So price should travel into this area before we go to the upside. Okay, so price can travel all the way into this zone. Okay, into this zone. So we are expecting the 5 will move downwards. And exactly price is doing with 1, with 2, with 3, with 4, with 5 of small degree. You can see it there. So that's with 1, with 2, with 3, with 4, with 5. Small degree there. Okay. So we change the color so that we see the degrees. We lower the degree. Okay, so we are expecting price to travel all the way into this area. So let's see how it's going to do it. Okay, so we almost there and price has started going to the upside. So this whole move is with A. Okay, with A. All right, with A, and we are going to get with B. So this with A, with B, and with C. You would see something like this. So the color should be yellow. All right, let's pause. Okay, so we have the wave B. How did we know that wave B will come somewhere? This should be a minimum 61.8 or 50 of this swing, this one. Okay. All right. So we take our Fibonacci, we measure from here to that area. And you see price came exactly to that area, just a little pips, and then started to go to the downside. Okay. So now that we are going to the downside, we should get equal legs. Oh, we should get equal legs, all right? Equal legs of this move. So we measure. You can use the Fibonacci to do that, but I'll just use this tool to make it very simple. Okay, so price should come here, somewhere here. Price should come somewhere there. Then we would be in business. Not comply to the rules. I'll change it. All right. So let's see how price is going to travel all the way into that zone. Then we have completed the cycle. Okay. So let's see if price is going to go into it. Let's see price going to go into that zone. Okay, it looks like price is coming. Price is coming. Price just touched the peak of it and started going to the upside. Let's be patient and see if it will come again. Again, it's just going to go to the upside. Okay. So this is how we trade the Elliott wave. This is the basic 1, 2, 3, 4, 5 pattern. This is how we trade it. It's very, very simple and interesting. Okay? Okay, very, very, very simple and very interesting pattern to trade. It falls exactly the way you want it to be, and it gives you that kind of edge to hit the market. All right, guys. I'll do another video and post it as we compile them. Bye for now, guys.